Hello, my name is Jiayuan Zhang. I am an undergraduate at the Tianjin University of Finance and Economy in China. The paper I will present today is titled The Impact of Prospect Theory on Asset Forecasting, a comparative study based on random forest and linear regression. In real life, the price of financial assets are influenced by various factors such as asset value, market funds, macroeconomic trends, and investor sentiment. Against this backdrop, we have set two primary research objectives. First, to explore effectiveness of machine learning algorithms in predicting financial assets price. Second, to study the impact of incorporating prospect theory in assets price predicting. Machine learning, as a powerful data analysis tool, has been widely applied in many fields, including finance. Through this research, we hope to find a more accurate and efficient method for asset price prediction. Meanwhile, prospect theory is a theory that describes investors' decision-making behavior and their uncertainty, taking into account their psychological expectations and risk attitude. Therefore, we believe that incorporating prospect theory into predicting models may improve prediction accuracy. To conduct this research, we collect two main datasets. The first dataset is price data for the Standard and Poor's 500 stock index, spanning from 1950 to 2016. This dataset contains 67 years of price data, proving rich and accurate historical information for our research. The second dataset is price data for Bitcoin, which include 1,048,575 timestamps. Bitcoin as an emerging cryptocurrency experienced extremely volatile price price movements, uh, attracting significant attention from investors. We choose Bitcoin as a research subject because it represents a new asset type in financial markets, and its price movements may be influenced by different factors than traditional assets. By comparing these datasets, we further verify the applicability of machine learning algorithm and prospect theory in predicting emerging data asset price. Next, let's discuss the research method and hypothesis. To deeply explore the research objective, we adopt the following two primary methods. First, regression analysis. We will use two models, linear regression and random forest regression, for experimentation. Linear regression is a classical prediction model that establishes a linear relationship between independent and dependent variables for prediction. Random forest regression, on the other hand, is a classical ensemble algorithm in machine learning. It proves prediction accuracy and stability by constructing multiple decision trees and combining their prediction results. By comparing the experimental results of these two models, we can determine which regression model is more effective in predicting financial assets price. Second, classification analysis. We will use a random forest classifier to evaluate its performance in predicting asset price movement, its up and down. Classification analysis can help us gain a more intuitive understanding of market trends and providing investors with clear decision-making basis. Regarding the introduction of prospect theory, here is a hypothesis. Overall, we hypothesize that investor sentiment will affect the macro market. Investor sentiment is a crucial factor that influences market trends. Therefore, we hope to review the market sentiment influence on stock price by studying the relationship between investor sentiment and the stock price. Further, for Standard Poor's 500 index, we hypothesize that the prospective index will affect the entire stock index, not on just the individual stock. We believe that prospective index can reflect investors' overall expectations and attitudes towards the market, thereby influencing the entire stock index. For Bitcoin, we hypothesize that prospective will directly affect Bitcoin price. These assumptions are the foundation of this research and the questions we hope to verify through the experiment. In subsequent research, we will use the collected data and the selected algorithm to further validate and analyze this hypothesis. First, let's look at results of regression model. When comparing linear regression and random forest regression model, we found an interesting phenomenon. The linear regression model performs more effectively in prediction. These results may be unexpected, as random forests typically renowned for their strong learning and generalization capabilities. However, in our study, linear regression model captured price movement trends in a simpler and more intuitive way, resulting in better prediction performance. This suggests that in specific situations, simpler models may more easily achieve higher quality results because they avoid issues such as overfitting and complex parameters adjustment. Here's the results of classifier. We use a random forest classifier to predict the asset price fluctuation. Unfortunately, we found that the classifier accuracy rate was around 50%, which is equivalent to the result of random guessing. These results may indicate that asset price fluctuations are influenced by various complex factors that may be difficult for a single machine learning model to capture. Nevertheless, we still believe that these results have important reference value because it reveals the uncertainty and complexity of market fluctuations. Finally, let's look at the application effect of prospect theory. When introducing prospect theory into Bitcoin price prediction, we found a positive phenomenon. The introduction of prospect theory reduced prediction error dramatically. This result supports our hypothesis from the previous test. By combining the prospect theory with Bitcoin indicators, we can construct a more accurate and comprehensive prediction model to provide investors with more reliable decision-making basis. This chart shows the significant impact of the previous day's adjust close, high and low in the stock market on the asset price for following days. In this chart, especially only last day's data is important for the predictions price. Thus, in technical analysis, historical price data is crucial for short-term price, reflecting past trends and investors' expectations. It is valuable for next day's trend prediction as price forecast but may have limited long-term effectiveness. In summary, the research results of this study shows the potential and challenges of machine learning algorithm and the prospect theory in predicting financial assets prices. We found that the simpler machine learning model have higher accuracy in predicting assets price, although the simpler linear regression model may be more effective in specific context of the study. We also recognize the complexity and uncertainty of market fluctuation. Does this mean they are the right choice for predicting future asset price? Meanwhile, The introduction of perspective theory provides us with a new perspective and method to improve prediction model and demonstrates its potential application value in asset prediction. But it is also has limitations. Compared with the Standard and Poor 500, is it more effective on Bitcoin datasets due to the regulatory differences in the two financial markets? In addition, does perspective theory work on other financial assets? These are all the questions worth exploring as well. Looking ahead, we will continue to deeply explore machine learning algorithms and theoretical models suitable for various financial assets. Our goal is to find effective models can more accurately reflect the investor sentiment, which will not only help improve prediction accuracy but also enhance predict stability. In this process, we will continuously try and optimize various algorithms and to capture more useful information in the complex financial market. At the same time, we will also pay attention to change the market dynamics and investor behavior, adjust our model in the timely manner to adapt to the ever-changing market environment. And here is the reference I used in my research. Above concludes my presentation, and I look forward to in-depth discussion and exchange with you, jointly exploring this field. Thank you for your attention and participation today. Wish you a good day.